will be keep on asking questions whether fundamentally whether we correct or not. So I think if we look at the entire space as a whole, I think last couple of months they've underperformed vis-a-vis the overall markets if you look at it. So I think post this quarterly numbers, if we see that, then I think they've underperformed vis-a-vis other things. So I think still room for the IT to catch up, and I think way the stocks have performed and way the numbers are, I think the valuations are justified for it, and I don't see any reason why there could be that the stocks have just run hard by the fundamentals. So I still feel value in the large cap IT names like Infosys, TCS, HCL Tech, which remains our top bets. So I don't. So there's any kind of a way where we're talking about this, the markets are way ahead of fundamentals. And if you look at overall Nifty valuation as well versus the entire market, so still I think if you look at 10-year PE average, what we talk about, it's still I think it's available at cheap at 18.9 times earnings. So I think I feel that I think still the markets have not run up. So to be much looking at it that on the index level, that we are at all-time high, but that's saying feel that a lot of move from here in the markets as well.
In fact, that's really been the discussion topic on the channel as well, as to what is the prospect of IT. Are the stocks purely playing catch up to what's happening in the rest of the market, or is there material signs of growth coming back once you hear from the IT managements come January? Hear out a slew of experts that we spoke with.
Fact of AI, if at all there, is going to be only in that first area of application development. And application development will have impact in terms of productivity gains of AI. And obviously, some of the requirements will see higher productivity and lesser number of people and so on. But its overall impact is going to be positive. But in overall longer term gains, I do strongly feel that productivity will improve the demand for new applications. And I'm seeing it. Our customers are right now asking for applications to be built around AI, which we would not have done without AI. AI makes it possible now in the healthcare industry that we are very active.
2024 will be the return of growth. And from a Gartner perspective, we have been forecasting the IT services growth for quite a long time. And every quarter we revise our growths. And I have been observing closely our forecast, which we have made, and we see that 10% around growth on IT services spending, end user spending is going to happen, and that is going to remain consistent for next 2 to 3 years. So we see a very positive mood at this point in time from IT services perspective. There is no reason for much of concern.
Welcome back. Well, the market is just gaining strength to strength. In fact, 20,400 is just 40 points away. So a good momentum that we have for ourselves. But in the meantime, let me go across to Naresh to find out which are the top bets coming in from the metals pack, because that too is shining away. Naresh, your view?
So in terms of metals, Hindalco looks the most promising. The stock has slowly trended up and could catch momentum going forward. So at current levels as well as on dips, that could be a stock which could actually go back and hit new all-time highs in the metal pack. And today, Tata Steel has been a breakout, which could be a fresh startup move towards that 155 mark. So I would go with Tata Steel and Hindalco.
Those are the top recommendations coming in, but a lot of these public sector names are still doing quite well, Rahul. Today, PNB became the third public sector bank to cross the 1 lakh crore market capitalization, and SBI is now sitting at all-time high levels. What should one do? Book some profits or continue adding positions?
So I think I've been very bullish on all this PSU banks. So my thought process is I think one should continue to hold on, and I think this is just the beginning. What I feel there is a lot of room and upside which is going to happen in this entire
PSU basket. Obviously, after a long time, we've seen State Bank coming back into the flavor, and it was not crossing beyond 620, 630 levels. So I think if we just had a few days back, we had an interaction with the management, and I think very strong commentary coming out from the management side. 13% loan growth, which the management is talking about. Secondly, I think the asset quality has improved if we see the last quarter numbers. And then thirdly, I think the credit cost will come by 50 basis points, what the management is guiding for. So my sense is, I think entire PSU large banks baskets, I think State Bank leading from the front, followed by PNB. I think obviously the stock has been hitting 52-week high for quite some time, and I think still I believe that there could be upside in maybe still Bank of Baroda, which has underperformed vis-a-vis like other banks performs. I think a lot of room for Bank of Baroda as well. Canada obviously has been at a 52-week high.
Yeah, Rahul, I think we have you on a very scratchy line. It's just difficult to hear your audio. We'll do one thing, we'll try and reconnect. But in the meantime, a lot of other stocks are actually doing quite well. Honasa Consumer is again up above the 400 rupee mark, so 6% surge coming in. In the last few minutes, Godrej Agrovet is one stock which is also doing quite well for itself. So suddenly there has been a bit of a spike on that counter, and then across the board, whether it's Aether Industries, Arvind Limited, Amber Enterprises, all of these stocks are definitely gaining ground. But Kunal, I wanted to talk to you specifically about SBI because there's a 4% move there. And then looking at the other one, Maruti, because that has been a stark underperformer in the last month or so. It went below the mark of 10,000 on an intraday basis.
Yeah, so I think Maruti is a bit of a tricky because from the auto pack, that's one stock which has potential but has been a huge underperformer. So, whether you look at it from the time when most of the auto stocks, the four-wheeler, specifically the likes of Tata Motors, M&M in 2022 mid, when these stocks, they started to bottom out from their, 1 year correction and then started to show signs of uptrend. Maruti had underperformed there. And even the last, I think, few months when I think M&M and as well as Tata Motors have come back to make new highs for themselves, that stock has also underperformed. So it doesn't come as a surprise that Maruti is underperformed, but I would still believe that 10,000 broadly could be a good support for the stock price. And even though it could probably try and retest those levels, I think from a medium to long term play, it could be a good buying zone for Maruti. So not bearish on the stock, but then expecting the stock to be a very slow and a gradual mover over the near term, unless there is some sort of a catalyst in terms of news flow. Now, SBI apparently has been one of the most stronger stocks from the PSU pack, especially from the time when the stock was on the verge of breaking out of a triangular pattern. We discussed the stock a few days back and how the stock was showing potential of a big breakout. That breakout has come today on the back of some extremely encouraging volumes so far. And the good part is that the volumes are also much more stronger on the F&O side for SBI. So this indicates that this could not just be a short-lived momentum, but this could be a start of a trend for SBI.
Okay, that's the take coming in on SBI, but the chart which has really sprung up today perhaps is IREDA, and I think it's the first time since its listing that the stock is seeing any red, still languishing down about 10% as we speak right now. But from a issue price of 32, and I think on the listing day itself, it popped up to about 50 odd rupees. From there, it's still sitting at double levels. That's IREDA in trade for you right now. What about PFC, REC? Are they too seeing any signs of red? Is the market taking some chips off the table? Yes, surely. PFC, REC as well are seeing that little bit of red trickle in for themselves. Naresh, let's get a chart check going on both PFC as well as REC.
So both these names have made a very large move, a parabolic move in the last 2 months. So every one of us expected some bit of a pause at say 350, 360. The stock has moved up to 420 levels. So in such a case, if it takes a pause, we could go back towards the 360, 380 mark. That's the risk. Out here, the stock has gone up from 230 just 2 months back to almost 430 levels. So in this case, one would expect a pause. Difficult trade to short, but time to take chips off the table or rather the full position.
Okay, so that's the take coming in on some of these power financiers. Let's take a look at what are the other sectors which are buzzing around. And insurance is one space which has been rather weak, of course, on account of the news flow that we have been talking about in terms of surrender value. Rahul, what's your take? Should one just completely avoid the insurance sector because they're better placed? Or this is one of those sectors which still has value because the stocks haven't run up, and maybe when the tide turns, these will be the stocks that rally hard?
So I think there should be an allocation in that portfolio, but I think if I look at holistically in terms of in a financial space, then I think the banks, I would prefer private as PSU vis-a-vis this names which are insurance names. So I don't think so. There will be a limited upside for all these names because obviously the valuations are still not justified in terms of what they are trading at right now. And I think limited upside, maybe 10 to 15% upside in most of the names which we've been talking about. So my sense is I think the banks will be the better play where the upside could be more and where the market's momentum as well is right now at this point of time.
Actually, some of the stocks which were doing very well in this last leg of the rally between November to December are actually taking a turn for the worse, Kunal. Case in point being Prestige. It's down about 5% today. You also have JSW Energy, which is down 3%. Is this the time one should book profit? And even TVS Motors today down 2%.
No, I think it's rotation of the same capital, Anisha, which happens because, at some point of time, the real estate stocks, which were up, I think, 25% in this last, 25 or 27%, if I'm not wrong, in this last leg of uptrend from 18,800 on the Nifty. So there's bound to be a point where traders would be like, let's trim the profits over here and then shift on to some other spaces, some other sectors which are breaking out. For example, today there are two prominent sectors which are breaking out, of course, is the IT index as well as the banking stocks, especially the PSU banking names. So I think, I wouldn't be surprised that this pattern probably happens for another couple of days. We'll see other, performing sectors in the last, I think 2-3 months. Maybe something from the pharma pack, which would probably get into a bit of a corrective phase. Real estate stocks, that move is not trickled into the other names like DLF, Oberoi Realty, Godrej, etc. So I think that move could probably happen where you might see these stocks ebbing off a bit more, trimming off gains. But I think the move would probably continue in some other spaces like the IT and the PSU banking stocks.
Okay, that's the take coming in on what you're seeing on some of these varied sectors. In the meantime, it continues to be metal really, which is holding up today. There's, of course, IT, which continues to look good as well. And then, of course, there are those crude sensitives. Look at ONGC. That's perked up another 2.25% today. SBI has been going very strong. And, of course, there's Adani Enterprises as well, which is going good by about 3.25%. The market does have its fair share of laggards too. Look at ICICI Bank, HDFC Bank, or for that matter, Axis, and even Kotak, which is lying just about flat. So they are also sort of weighing heavy on the index as we speak right now. Naresh, what is your reading now on the Nifty Bank in particular, especially the private banks within that?
So if you look at the Nifty Bank, we've continued in momentum, but the largest weight, which is HDFC Bank, has still not hit a new all-time high. So clearly that tells you the structure of the market is beyond the top heavyweight. You've ICICI Bank, which has made a new all-time high, but has not seen a lot of follow-up. So if you look at the whole index and the stocks, a lot of stocks have made fresh all-time highs after 1 year, in some cases 18 months. So in such a scenario, it should not be a small move. It should be a structural breakout, which should continue. So in this case, we could go all the way higher and higher. The best way to trade this momentum is to keep a trailing stop loss. And now the trailing stop loss would shift closer to the last swing low a few days back, which is around 47,200 on the spot Bank Nifty. So overall, the new leaders are coming up. We saw leadership coming up from Axis, which did a first move. Then we saw ICICI Bank, and today we have SBI. So the only ones left are HDFC and Kotak, which are yet to show any leadership move. So overall, the whole banking space looks interesting, but we are yet to see HDFC and show that same strength.
Let's see when HDFC and Kotak do return to that solid growth trajectory. But time now to slip into a very short break. Rahul, we'll let you go on that note. Thanks so much for making time. But as we head into this break, listen in to the latest commentary coming in from a couple of bankers, Bandhan Bank as well as Federal Bank.
If you see that in the last year to this year, trend is far better to repayment of that because the group discipline is coming back and the attendance is coming back. And the people are getting the business. If you see that Indian economy is growing and they are also getting the business, that have been also helped them to recover. Right. You see that in the first year after the pandemic, what happened? The people are some money taken from the others in the time of pandemic to run the family. First year they are trying to repay on that money. So that is some family are facing the challenges to coming back to this, the repay on that.
We are clear that this growth should continue. Our, as you noticed, our growth has always been fairly sort of even pace. We don't want to do things in fits and starts. In this part of the country, we were a pioneer, particularly in Northeast. In the early 70s, our bank's founder had moved and set a reasonable presence because at that point in time, many of the Kerala originated Christian missionaries were setting up presence in the northeast, so the bank followed that. So it did give us a presence in this part of the country, and then, like I mentioned, CR Avenue was our first branch 50 years ago. Right. We do see this, material opportunities coming up. At the end of the day, we are still a 1.2, 1.3% share bank in the country. So the growth opportunities are infinite. That's at a country level. If you take this part of the country, our share is like 0.6, 0.7%. So
Back with closing trades right here on ET Now. Look at the perk up in the market right now. We're closing in the weekend clearly in style. In fact, 21,400 here for the Nifty spot itself, and we're climbing up even higher, 21,500 actually for the Nifty futures too. Important to take stock of what the global markets as well are up to, because remember what we've seen this week has really been a Fed-fueled rally. So it's not been just us alone, but the global markets as well have held out very smartly. Europe, from what I can see, is at best a 0.5% uptick, that too for a DAX. FTSE is absolutely flat for itself. I'll just bring up the US futures as well and get a sense of where they're headed, because already one can stare after that fab finish that the Dow has been having for the last 2 days. Another 100 points is what the pre-futures already indicating. Similar is the case for the S&P as well as the Nasdaq futures, although a lot more tempered than what we are staring at, which is a solid 250-point move. Mahantesh Sabarad as well joins in on the show right now. Mahantesh, hi, afternoon. I guess the only question on everyone's mind is how to make the best of the rally that you're already seeing. If you're already fully invested in the market, what do you do then?
If you're fully invested, just enjoy the ride, because the markets are set to go even higher, apparently because of a lot of conducive developments that have happened, one of which you yourself alluded to in terms of the Fed action. If you're going to see Fed easing out in terms of the policies, there'll be a lot of money that will come to the shores of such countries as India. Not only that, within India, the grip of the manufacturing sector has been now quite good. There was a surprise GDP number, growth number within the manufacturing sector when we last saw the GDP reported for the Q2. And that said, it tells you the story that with the capex that we have been seeing, the steady growth in capex, now the manufacturing GDP going up, we should see that cycle turn quite positive ahead, and with a lot of money coming in, valuations will still reach higher. And even at this juncture, given the corporate profitability growth ahead, the valuations don't seem challenging. So if you're fully invested, just ride the wave. Probably it's only the time to clean up the last 3-4 stocks that you have in your portfolio that don't perform.
Point taken. Actually, there's a big up move that we are seeing. 21,400 has been scaled for the first time ever for the Indian markets. So just ending in style, as Aisha was also pointing out. But a part of that move in the last 20 minutes could also be perhaps on account of the rebalancing that we were expecting. In fact, HDFC Bank alone was expected to get almost $450 million worth of inflow, and that could partly explain the kind of move. In fact, let's bring on board Somit to get a sense as to which were the stocks and what kind of up move or inflows we were expecting. Somit, tell us more.
Well, multiple rebalancing events tomorrow. In fact, to be precise, 3 of them. Firstly, when it comes to the Dow Jones ESG index, Embassy Office Park REIT, JSW Steel, UPL, Godrej Properties and Macrotech Developers are being added to the Dow Jones Sustainability Emerging Market Index, while in the Dow Jones Sustainability World Index, 3 stocks are getting added, that is JSW Steel, UPL and Dr. Reddy. When it comes to FTSE, around $525 million of inflows are expected in selected stocks. Firstly, it's Nexus REIT, where around $9 million of inflow are expected to come in, which is nearly 28 times its average daily volumes. In Mankind Pharma, around $28 million of inflows are expected, which is around 5.5 times its average daily volume. Now, these 2 stocks are getting added into the FTSE indices, while there are few stocks whose weightages will increase index, and that is HDFC Bank. Firstly, $451 million of inflows are expected in HDFC Bank, around 1.7 times its 20-day average volume. Apart from that, there is Sheela Foam and Nazara Tech, which could see inflows of anywhere between $1 to $3 million. Now, a couple of stocks where the weightage could reduce, that is 361 and Delivery. Outflows of around $3 to $10 million are expected. And the last rebalancing event would be in the BSE 100, which is a very actively tracked index of the BSE, and there are 7 stocks that are getting added in the index, that is PFC, Hindustan Aeronautics, TVS Motors, Yes Bank, Persistence and APL, Apollo Tubes and IDFC First Bank. And 7 stocks that are getting excluded from the index are Adani Power, Tata Elxsi, Infosys, Voltas, CG Consumer, Bandhan Bank and ACC. So keep an eye out for all the stocks in trade, because there could be some movement in trade given the fact that there would be inflows and outflows in these stocks.
Yeah, and we are seeing the impact of those inflows and outflows. In fact, for the markets, let's take a look at which were the stocks which are actually pulling high in the last few minutes, because if I'm looking at the heavyweights, Infosys is now up almost 5%. TCS is also clocking in gains of 4.8%. Reliance Industries is up 1.2%. SBI is almost 4% higher, and HCL Tech, that stock is sitting at life high levels. It's 5% higher. And if you ask me, one of the big disappointments this year, which was partly HCL Tech as well, they've cut down their guidance twice already, and the first half of the year was quite dismal. So clearly the fundamentals and the stock move right now is not matching. However, they did point out the second half of the year is likely to be much better. One space which has been clearly underperforming is FMCG. Mahantesh, what's the sense on FMCG, ITC, Nestle? We heard the commentary in terms of the channel checks which are done for HUL as well, and clearly rural is not picking up the way Street was anticipating.
Yes, you are right. The rural segment is still sputtering in terms of the demand growth there. And I believe that it will take some time for the rural sector to really grow. Part of it is also dependent on how inflation will get tamed ahead. The rural segment is quite sensitive to the inflation dynamics. So higher inflation would mean that the consumption rapidly drops. And we have also been hearing a lot about this commentary related to the K-shaped recovery. That means a lot of premiumization that is happening with the top end of the market actually growing much faster and making up for the fall in growth in the lower end of the market. That said, that clearly affects the mass consuming kind of products that some of these companies in the FMCG sector produce and deliver. Lever also has some mass appeal products, so does Nestle. While they have categories for the premium segment, for them the mass segment is what really drives the volume growth and drives the overall growth in the top line. Sometimes that is essential for these companies to get better valuations or better valuation outlook from various investors. So FMCG will probably continue to face trouble given inflation is not yet tamed, but on the way to be tamed.
Flashes at the bottom of your screen wherein rupee has actually strengthened, gone below the mark of 83 rupees, and this is the first time it has happened since September. One would assume that this is a bit of a negative news for IT, right? But clearly today they're completely rubbing off any other news except the glass half full that they want to see. Because valuation wise as well, they are not cheap at all. If you compare it with the 5-year averages, whether it's the IT index, whether it's individual names, they're all sitting at higher levels. But yeah, I mean, the market is just in a mood to give a thumbs up to IT today.
Yeah, clearly they are. And Anisha, I think you had taken out that data also, right? In terms of percentage moves, how much are these individual stocks off from their previous peak? And that's quite a distance.
Yeah, for some of them it is. Wipro, for instance, is 40% away from their life high, so there's still that much room to go. HCL Tech today is sitting at life high levels. TCS was around 8%, but I'm guessing after the moves that we have seen today, that would be trimmed down further. So those data points will also come up for you on the screen. So HCL Tech is already done. It was only a distance of 0.3% when we had done this exercise at noon, but the rest of them have a bit of a distance to go. So clearly not the end of the rally, right, Kunal?
No, not really. I think this is just the start of a trend. So, right now is where I think portfolios would start to realize that they are underweight IT. And I think that catch-up is yet to happen for these stocks.
I'll be, sorry, just to interject, I'll be really interested in seeing what happens come January, because the numbers are going to be bad. So what happens? Will there be again a turn, or will that be a buying opportunity?
Anisha, isn't that worst already baked in? You've had two bad quarters.
In fact, if the stock price is correct post results, I think people would probably want to buy more on the opportunity.
Let's see which way it goes, because Mantesh, this is a discussion we've been having after every earnings, right? We have been going through that fine-tooth comb, trying to find what is the positive in the earnings, but it's really not happening.
Yeah, for the IT sector, the earnings growth is very lackadaisical, and we have talked about how recruitment in IT has stalled. In fact, the headcount has also come down. There are margin pressures coming in. But the important factor is that in all this story of gloom, the IT sector did have one positive in terms of deal wins that they were getting it. The deal starts were getting delayed. The deal wins were there. And I think it's time for those deals to start happening, because now that the Fed has talked about reducing interest rates, and the US economy has actually shrugged off the fears of recession. That tells you a lot of confidence will come back into IT spending, led by the US economy, of course, and our companies here will be therefore be able to deliver the slow growth. The deals will start happening now, and they will start doing better. I think some of it is already getting factored in the way the IT stocks have moved. Year to date, yeah, till 2 days ago, the year to date growth in Nifty IT was 15.5. Today it is 24%. Suddenly it's 10%, 9% kind of jump in 2 days.
Right. Okay, that's the take coming in on what IT stocks are up to. Besides IT, like I said, metals clearly is the one which is holding out very smartly, led by Tata Steel today, along with Nalco. These are stocks which are looking good. Hindalco, of course, is looking very smart indeed. In fact, let's revisit SAIL, considering it was the big mover from yesterday. Let's see what that stock is up to. Kunal, not seeing much of a follow-through from yesterday on SAIL.
I think one of the reasons is because the futures are in ban, F&O ban.
Yeah, no wonder.
So that is one of the reasons why the seeing a pause. But I think, with the kind of momentum which you're seeing into the metal stocks as well as the overall market, it could just be a matter of time that the stock would also get into a stronger momentum going forward. So I think, there's always an alternative to try and shift towards delivery volumes if for someone who's not looking to enter into, buying the stocks because of the F&O ban. I still believe that this is a very strong set of momentum, and sales specifically, I would actually believe that should be good for another at least a 15 to 20% up move further.
I mean, the momentum is strong across. Take a look at the Bank Nifty. I mean, from the bottom of the day, that index is up almost 4 to 600 points actually. Yeah, 5 to 600 points from the bottom of the day. That's the kind of up move we have seen. And the Nifty is now, just 30 points shy of 21,500. I mean, just a couple of weeks ago, we were talking about when will it come out of that range, that 20,900 had become such a boring mark for the market, and suddenly we are seeing this spurt of almost 600 points within 2 to 3 trading session. Nuresh, if I had to ask you to, bring us some top recommendations, whether mid caps or large caps, which are the 2 to 3 stocks that come to mind?
So the first one is State Bank of India, which is a clean breakout. So it remains a buy on every dip. The second one would be Federal Bank, which has been the leading bank in the mid-cap category. And apart from that, one could look at a contra bet, which is ONGC, which is coming out of a 5-year high. The stock was last at 190 when the Russia-Ukraine crisis was at peak. And we are today at 195, 200 levels. So this could be a big surprise going forward, could be a major re-rating candidate. So these are the three names. Banking looks promising, and then ONGC as a contra bet.
Right. Okay. Let's take the off-cam conversation forward. 25,000, right, Kunal? You've said that on record.
Yeah, I've said it on record, and I'm still very bullish. Yeah, by May. And hopefully post-elections, if I can have that.
Post-elections.
I'll have that 15-day edge with me. Maybe.
Let's keep this cut so that we can follow it up.
I've said it on air.
Yes, exactly. For us to remember this, because we will forget. It's a 25,000.
No, we won't.
And my Bank Nifty target is 57,000, which means at least another 9,000 points.
My God, that's quite a bullish
So what's going to lead? You're saying it'll be banks.
So it has to be a cumulative of many factors. Banks will of course play a stronger role because of the weightage they carry on the index. And the comeback of the IT index is adding more confidence to the move that, for example, today the first half was IT index, then the second half you have the banking stocks which made a comeback. This is a strong relay race which is happening, which is very rare in a consolidative market. But in a strong bull market, these are sector churns which tend to play and sustain and helps the index to grow from one base to the other. So I think 27,700, 500, which was the previous support, I think is now, we could be looking at maybe a 1,000-point recovery from those levels.
Wow, Mantesh, is it getting too euphoric? The bulls must be getting a bit of a vertigo now, the kind of meteoric move we've seen this week itself. We were just discussing the lows of the week was around 20,800 sub. So it's been a very solid rally. In fact, Naresh, if you want to come in on that one, are you also with the view that 25,000 could be there on the cards by May itself?
So I've been a little conservative. My target has been 22,500 and 15,000 on the bank nifty. And what I've learned over the years in the market is the best way to play a trend is just to ride onto it rather than keeping targets. Keep trailing onto your position. That's the only way we've been able to catch all the moves in the last couple of years. So the viewers, we've broken out. And what is interesting is the fact that at 20,500 to 20,800, we had already broken out on the Nifty, but on Nifty 15 US dollar terms, that was a fresh breakout. So the last high, 18,600 in 2021, was crossed in US dollar terms only at 20,800. So the flows could continue to surprise on the upside. And we've seen this happen time and again in 2017 as well when that breakout took place.
Okay, look at the Nifty. It seems like on the spot itself, we're going to clock in that 21,500 level today itself, 300 points higher. And the chunk of the move has come in just the last 1 hour or so. Of course, it's been IT, banks. Look at SBI. SBI is now up 4% in trade. 651 is where SBI futures are currently, touching that 650 odd mark as well. So 4% of a move coming in there for SBI alone. IT, of course, continues to chug along very nicely. But, you know, Kunal... Okay, I'll come to Kunal in just a second. Naresh, you know, while we're talking about the Nifty, what do you think is going to happen with the mid and small caps? Will they as well continue with the up move that the rest of the market will see?
So we'll continue to have some phases where a period of time where the small cap underperforms for a few sessions. Like if you see today, the small cap index is underperforming the large cap indices by a margin. So that would continue to happen. But if the Nifty continues to trend up, we may not see a negative small cap index. So overall, yes, there could be weeks wherein it should be underperformance. But till the time it is up, it does not really make a difference because some of the stocks could do really well, even in the mid cap, small cap category.
So Mahantesh, let me pose that question to you. We were discussing it's been getting too euphoric right now. A bit of a vertigo for the bulls or not yet?
No, I don't think so, because purely from a valuation perspective, I think we haven't reached the peak. Maybe we have reached the peak in terms of the market, but from a valuation, the peak is still some time away. And plus, we have gonna have major tailwinds coming in with the COVID kind of legacy gone, with all the capex related issues now resolved, all these tailwinds and inflation on the mend. All these tailwinds would mean corporate earnings will start surging ahead, and we will have therefore better valuations to look forward to pick into the market. One could become stock specific, but I don't think the overall market is gonna give up gains so quickly.
No, it's not getting too meteoric right now, at least for the bulls and the valuations, but 20,500.
Getting meteoric, they're not getting vertigo.
Okay, so it's getting meteoric but not getting vertigo. That's the verdict coming in from Aisha. Let's see.
No, that was your question, so I'm just correcting you.
Fair enough. But in the meantime, let's take a look at which were the big buzzers for the week gone by. You had IRFC, which is higher by 24%. Hudko has had a good run, 20% higher. Mastech was one of those IT stocks that has managed to clock in gains of around 16%. Chalet, JM Financial, Steel Authority, Nalco, NLC, these are some of your other big gainers, but it's not all been okay. Industries, that was a key laggard this week, 12% cut. Manyavar is the other one. Actually, we didn't realize it, but that stock is down 9% in this week itself. Torrent Power 2 is coming under pressure, and Paytm and Delivery too. In fact, Mahantesh, we have stopped talking about some of these new age tech companies, right? Paytm, Delivery, Zomato, Honasa for that matter. What's the latest recommendation and view on these?
So some of these new age tech companies have run their course. I think the basic problem with many of these companies when they listed in the market was they commanded too high a premium or demanded too high a premium in terms of valuations without having an underlying confidence in growth. But at least the part on the growth that is the part of the growth has been taken care of. Some of these companies have returned back to profitability, good amount of business changes driving profitability ahead, and overall revenue growth now seems to be more secure. But they still have to shrug off that premium or excess valuations yet, and you still have a lot of overhang in terms of earlier investors wanting to sort of book their profits and get away. So there will be pressure on some of these stocks going ahead. I would be a little choosy or rather avoid this sector when given the fact that old age economy stocks, some of them are really doing very well. Take SBI, for example, the classic old age economy stock, which is a bet on India as a whole, is doing really well. So one should be picking those stocks, then worry about what's happening with some of these new age tech companies. Let them fight their battles in terms of revenue growth, profitability growth. Once they are in the good valuation zone, one can once revisit them and take a look.
Okay, that's the take coming in on some of these new age fintech companies. 21,500 for the Nifty futures. Let's also take stock of what's not performed well, even in this surge of the market. So look at Maruti, for instance, that's down about 1%. Bharti has been an underperformer today, 1.5% lower there. HDFC Bank is lied flat. There's Axis Bank as well, which has been absolutely flat. Kotak Bank as well has really not participated in the move today, although some of these stocks definitely are lifting off from the session lows, but not a meaningful move in the green in that sense. But Kunal, to your point about the Nifty bank levels as well that you see, along with your target of 25K on the Nifty, what do you see taking leadership within banks? Would it be the underperforming trio or would it be the leaders?
See, I think it'll be the leaders in terms of the weightage. So I would probably believe ICICI Bank, HDFC Bank, and SBI from the PSU banking stocks. I think it should have a fair share of the potential price gain going forward because these stocks were huge underperformers. I think broadly, so for example, I think the last 2 or 3 years, these stocks have not participated at all. Maybe a few percentage points here and there from the 2021-22 highs, but then over the last 2 years, there's hardly been any major participation when the index has moved up higher. So first is a realization that these stocks are underperformers and probably trying to latch up to these stocks, which could also add to the weightage. Given to the weightage these stocks have on the Nifty 50, which should also add to the potential price gains for the benchmark index. And then I would probably believe that the tier 2 banking names could follow up. So I think there are many other banking stocks which have been underperformers. For example, from the private sector names, you still see IDFC First Bank. I think Bandhan Bank also to a larger extent has not shown any major kind of a price recovery. RBL Bank has been in this 250, 260 odd mark for quite some time. So that stock has also shown a lot of potential, but nothing major in terms of the last 2 years, 2.5 years of the chart pattern. So there are a lot of underperforming private sector banks from the mid cap and also which could play a catch up for themselves. And the PSU banking stocks, I think they've already gone through a strong uptrend in fag end of 2022. They went through a bit of a corrective phase start of 2023. I think these stocks are ready to make a comeback for themselves.
Okay, let's get in some BTST trades as well. Going on that note, Naresh, what's on your list?
Still a buy on Federal Bank, which has come close to a new 52-week and an all-time high. Expecting a target price of 162, stop loss at 154. And then continue to be bullish on SBI, stop loss at 638 and a target price of 660.
What about your BTST ideas?
So I'll go with the buy on SBI with a target of 680, stop loss at 625. Expecting this to be a strong breakout move for SBI. And Tata Motors, I think at 730 approximately, looks to be an interesting bet. Targets of 780, stop loss at 710.
Okay, SBI, Tata Motors coming in from Kunal. Those are the BTST trades. But look at what a fabulous week this has been. In fact,